The bank account you are using right now is probably making someone else rich. Not you, someone else. Your bank is taking the money you deposit, lending it out at 15, 20, sometimes 25% interest, and giving you back 1 point something percent if you are lucky. In 2026, with the best easy access savings rates sitting at 4.5% to 5%, there is absolutely no reason to accept that deal anymore. Today, I'm going to show you exactly which accounts UK Gen Z should be using, which ones to ditch immediately, and the switches that take less than 10 minutes but could put hundreds of pounds back in your pocket every year. Here is the number that should make you angry. The average UK current account pays 0.1% interest on your balance. 0.1. If you have £2,000 sitting in a standard high street current account right now, you are earning £2 a year in interest. £2. Meanwhile, the best easy access savings accounts in the UK right now are paying between 4 and 5%. On the same £2,000, that is between £80 and £100 a year. The difference between the worst and best option is not complicated. It is not risky. It is just a 10-minute switch that most people have never made because nobody told them it was worth doing. The 5 switches I am going to show you today could collectively put between £300 and £800 back in your pocket every single year, depending on your balance and your situation. Let us break them down. Switch number 1. Ditch the legacy high street current account. If your main bank account is with Barclays, HSBC, NatWest, Lloyds or Santander and you have been with them since your parents helped you open it as a teenager, you are almost certainly on their worst deal. Legacy high street banks count on inertia. They know most people never switch, so they offer the worst interest rates, the most fees and the least features, because they do not have to compete for customers who never leave. Meet Emma, she is 24. Emma has banked with Barclays since she was 16. She has £2,300 in her current account at any given time. Her Barclays account pays 0.1% interest. She is earning £2.30 a year on that balance. Her colleague at work uses Chase UK. Chase UK currently pays 3.5% on current account balances up to £150,000. Her colleague is earning £80.50 a year on the same balance. The difference is £78 for the exact same money, just in a different account. Emma has not switched because it feels complicated. It is not complicated. The current account switch service in the UK means your bank does the entire move for you. Direct debits, standing orders, salary, all transferred automatically within 7 working days. It is completely free, and it is guaranteed by law. Chase UK, Monzo and Starling all consistently offer better rates than the legacy high street banks. If you are still with one of the big 4, this is your sign to switch. Switch number 2. Open a dedicated easy access savings account. Your current account is not where your savings should live. Even if you have switched to a better current account, keeping savings mixed in with your spending money is a mistake for 2 reasons. First, you spend it. When savings and spending money share the same account, the savings blur into your available balance and slowly disappear. Second, current accounts, even the good ones, rarely pay as much as a dedicated easy access savings account. Meet Charlie. He is 26. Charlie keeps everything in one account. Salary goes in, expenses come out, and whatever is left at the end of the month, he considers his savings. Except they are not really savings. They are just money that has not been spent yet. He has roughly £3,000 sitting in his current account at any given time that he considers his emergency fund. That money is earning him almost nothing. A dedicated easy access savings account with Chip, Marcus by Goldman Sachs, or trading 212 right now would pay him between 4 and 5% on that balance. That is between £120 and £150 a year, just for moving money from one account to another. The rule is simple. Emergency fund and short-term savings go into a dedicated easy access savings account, not your current account, not under the mattress, a separate account earning a proper rate. Switch number 3. Use a bills account to make budgeting automatic. This is the switch most people have never heard of, but immediately wish they had done years earlier. The idea is simple. You have 3 accounts. Account 1 is your current account where your salary lands. Account 2 is a bills account where all your direct debits live. Account 3 is your easy access savings account. On payday, you transfer the exact amount needed to cover your bills into the bills account. You transfer your savings amount into the savings account. and what is left in your current account is your spending money for the month. Guilt-free, no budgeting app needed, no spreadsheet, no willpower. The structure does the work for you. Meet Zara. She is 25. Zara used to spend the first week of every month anxious about whether she had enough to cover her bills. She would check her balance constantly, trying to mentally subtract upcoming direct debits from her available funds. She set up a bills account 3 months ago. It took 40 minutes to arrange. Now payday happens, the transfers go out automatically, and she spends the rest of the month knowing that whatever is in her current account is genuinely hers to spend. Her financial anxiety has dropped significantly, not because she earns more, because the structure of her accounts now matches the structure of her actual financial life. Most banks let you open multiple accounts for free. Monzo and Starling both make this particularly easy with their spaces and savings pots features. Switch number 4. Stop using your debit card abroad. This one costs UK travellers hundreds of pounds a year in fees they never notice. The average UK debit card charges between 2 and 3% on every foreign transaction, plus a fixed fee of £1 to £1.50 per transaction, plus an ATM withdrawal fee. On a 2-week holiday, using a standard Barclays or HSBC debit card could cost you £30 to £60 in fees alone. Invisible fees. Fees that never appear as a single line item so you never notice them adding up. Meet Liam. He is 27. Liam spent 2 weeks in Portugal last summer. He used his NatWest debit card for everything. When he got back and added up the foreign transaction fees, ATM charges and currency conversion markups, he had paid £44 in bank fees over 14 days. £44 for the privilege of spending his own money. His friend, who uses a Starling account, paid £0. Starling and Monzo both offer fee-free spending abroad on their standard accounts. No foreign transaction fees. No ATM fees up to a certain limit. If you travel even once a year, having a Starling or Monzo account purely for travel use is one of the easiest wins in personal finance. Switch number 5. Check whether you qualify for a bank switch bonus. This is free money that banks give you to join them, and most people have no idea it exists. Banks regularly offer cash bonuses of between £100 and £200 to new customers who switch their main current account. HSBC, First Direct, Nationwide and others have all run switch bonuses in the past 12 months. The typical requirement is simple. Switch your main account using the current account switch service. Set up 2 or 3 active direct debits. Pay in a minimum monthly amount, usually around £1,500. Do that for 2 or 3 months and the cash bonus lands in your account. Meet Tom. He is 29. Tom has switched his main current account twice in the past 3 years to collect switch bonuses. He collected £175 from First Direct in 2023. He collected £200 from HSBC last year. That is £375 collected in switch bonuses, for doing nothing more complicated than changing which account his salary goes into. The key is to check comparison sites like Money Saving Expert and Money to the Masses for the current best switch offers before you move. They update in real time. The deals change, but there is almost always a switch bonus available from at least one major bank. Here is exactly what to do today, not this week. Today. Step 1. Check your current account interest rate right now. Log into your banking app and look at what rate you are being paid on your balance. If it is under 1%, you are on a bad deal. Step 2. Compare Chase UK, Monzo and Starling. All 3 pay significantly better rates than the legacy high street banks. All 3 have better apps, and switching to any of them is free and handled automatically by the current account switch service. Step 3. Open a dedicated easy access savings account. Chip, Marcus by Goldman Sachs and Trading 212 consistently appear at the top of the easy access savings rate tables. Move your emergency fund and short-term savings there today. Step 4. If you have a holiday booked or travel regularly, download Starling or Monzo and use it as your travel card. 0 fees abroad. It costs nothing to have both. Step 5. Check Money Saving Expert right now for the current best bank switch bonuses. If there is a deal worth taking, the switch process takes 10 minutes and the money lands in your account within a few months. Links to Chase UK, Monzo, Starling, Chip, Marcus and the Money Saving Expert switch bonus page are all in the description. If this video put money back in your pocket, subscribe, because next week we are covering the UK tax brackets in plain English. Most people have no idea what tax bracket they are actually in. And the mistake they are making because of it is costing them money on every single pay rise they receive. See you in the next one.